I'd like to welcome the management and thank them for giving this opportunity to us. Handing over to the management for opening remarks, post which we'll take the Q&A. Over to you, sir.
Yeah, very good morning, dear ladies and gentlemen. It's a great pleasure to greet you all on behalf of our Board of Directors and the senior management. We begin by thanking you for sparing your valuable time in joining us here today to discuss our fourth quarter and full year earnings for the financial year 2017 and 18. At the outset, I'm pleased to announce a dividend as the board has recommended a dividend of 120% of the face value, that is 10 rupees per equity share for the year financial 2018, which amounts to total dividend payout of 26 CR, and the dividend payout is 43.7% of reported profit after tax. This is 20% higher than the previous year, in line with our committed to create a sustainable wealth for our shareholders. Our company has agreed to distribute an optimal and appropriate level of profits earned during the year. As announced at the beginning of the year, we have been optimistic about our business prospects with an upswing in demand for financial 2018. I'm happy to report that we have achieved a healthy growth of 11.7% during financial 2018. Apart from strong growth in sales, our dependence on woolen segment is reducing, as our efforts on increasing cotton sales is beginning to take effect. Cotton now contributes nearly 60.8% of our revenues of financial 18 compared to 58% of the previous year. At Monte Carlo, we continue our endeavor of building a leading branded apparel company. Over the years, we have successfully expanded our horizon and diversified our business operations. We have created a comprehensive range of woolen, cotton blended, knitted and woven apparels and home furnishing through some of our ranges under the umbrella brand name of Monte Carlo, such as Plateen, Denim, Alpha and Queens. One of our key strengths has been our wide and growing distribution network with a prolific presence across India. We have a deep presence across India through 2,500 plus multi-brand outlets, 235 exclusive business outlets, and 283 national chain store outlets. The majority of our net revenues comes from MBOs and franchise EBOs, where we primarily sell on pre-ordered and outright basis. By virtue of this business model, there is no major inventory risk, and we remain adequately insulated from the normal hazard faced in the branded apparel business. I would like to highlight that till date we have experienced almost zero bad debt in our business, which stands testimony to our strong business model based on a zero credit risk policy for the company. Now, talking about our financial performance, during the first half of 2018, there were minor disruptions caused by the implementation of GST. However, I am happy to report that despite these major turbulent factors, our business has now returned to normalcy, and we should gradually see the benefit of GST comes into play, being the leading branded player in the industry. During the year, we have achieved a sale of 644 CR along with strong EBITDA growth of 30% to 100 CR. During the year, we have achieved 15.6% EBITDA margin without other income, while our EBITDA margin including other income stands at 18.4%. High EBITDA margin clearly reflects strong brand positioning of Monte Carlo in the country, as our company continues to enjoy higher EBITDA margin among the peers in the branded apparel segment. Since the last 2 years, we have been consistently making efforts towards reducing the debt level within the business. As a result, the interest cost has fallen sharply by 34% to 7.7 CR during this full financial year. Our debt equity ratio shows at 0.11, which can be used for faster growth and to reward to shareholders. For the full year, we achieved a profit after tax of 59.7 CR, which grew strongly by 35% over the previous year. We remain optimistic about our future growth and earning potential. We believe that we have built a strong foundation for the future with sustainable and a profitable growth for the long term. We plan to diversify our pan-India presence by increasing our penetration into central, southern and western regions of India. Our current strategy is to establish our brand visibility on a pan-India basis with increased focus on western and southern India. We have already made an encouraging beginning towards this goal. We are strongly focused towards rewarding our shareholders by following an asset-light business model. In this endeavor, we are focusing on optimizing our asset utilization, quality, efficiencies, and relationships. We have enough capacity headrooms to see us through the continuous growth in the near future. Therefore, we do not envisage any major capex for the next 2 years, during which our growth will primarily be achieved from higher capacity utilization. So we once again thank you, all of you, for sparing your valuable time and joining us here today. We can now open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. Anyone who wishes to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shailesh Kumar from Sunidhi Securities. Please go ahead.
Yeah, good morning and thanks for the opportunity. I would like to ask the management that in spite of the guidance of 15 to 18% kind of top line growth, we have ended the year only with 11% kind of top line growth. So what is going wrong with us? I mean, we have not been able to meet our sales guidance for last 2 years.
Yeah, thank you, Shailesh. You're right. Is the question over?
Yeah, first question is over.
Yeah, Shailesh, thank you very much. See, you rightly said that we gave the guidance of 15 to 18%. See, that guidance is given on the kind of response we were getting in the retail sales and also about the bookings we had last year. So guidance is definitely, based on the business prospects, but sometimes what happens is that there are some circumstances which makes the results little here and there. So in this year's case, the discounts again are a problem because the discounts are increasing every year. Traditionally, we have a fourth quarter is very weak quarter for us, but as all the winter wear, whichever we manufacture, normally goes on discount in the fourth quarter. So this year also we have to go for heavier discounts, which reduce our turnover also. See what is happening now in AS, all the turnover discounts, all the incentives, all the discount sharings have to be minus from the sales revenue. So that is why the growth came down to 12% as compared to guidance of 15%. But we are confident as far as company's potential is concerned about our next year's prospects.
So what do you suggest, or what are you targeting for FY19?
See, again, we have gave the guidance of 15 to 18% for next year as well. But problem is that the one thing which is happening in today's scenario as compared to the past, the discounting is increasing every year. The brands have started going for discounts even before the actual discount starts, that is the mid-season sales. So that is actually hurting the brand's margin as well as it is cutting the revenues also.
Sir, we are among the top 2 leading brands of the country. So doesn't our brand help in garnering us better pricing and not going for the discounting?
Sir, I think in today's scenario, even if we see all the leading brands, not only Indian brands, but the international brand also, no brand can survive without discounts. So when it's the end of season discount sales, everyone, whoever is a strong brand or a weak brand, has to adjust to the market conditions. When every brand is on sale in those days, you just cannot remain insulated to that practices which is happening in the industry. So we believe that going forward also the discounting sales is going to increase from last year as well. But we believe that we have strong benefit available with us, and we also have some policies which insulate us, which propel us to make more in fresh sales so that we can protect our margins. If you see the overall revenues of the company for full financial year, we have grown 12%, and the EBITDA has also grown by 200 basis points, and the PAT has also grown more than 35%. We were just comparing our profit and loss accounts with the leading branded apparel companies who are listed in Indian Stock Exchange. All companies have grown in the range of single digit only in the revenues. So I think we have performed, as far as industry is concerned, definitely better. But yes, we missed our estimate of the guidance which we gave 15 to 18%.
To what extent this is true that these online sellers, these are forcing established brand to give this kind of discounting and all these things?
Pardon?
The arrival of e-commerce, is it leading to this kind of pressure on, discount sales and all these things?
Yeah, you rightly said this is one of the factors which is actually influencing the brands to go for the discount sales, because the customers are now getting habitual to discount sales, because the discount sales starts very early. Now, even if the summer has not peaked, but we have a discount sale which is beginning from 1st May itself. Most of the brands have gone for discount sales. We have not gone for discount sales this year right now, but most of the brands have gone for mid-season discount sale and schemes. So e-commerce is one of the factors which influence the brands to go for the discount sales early as compared to past few years.
And sir, this 15 to 18% kind of growth guidance, which you are targeting, what is the volume growth which you are factoring?
Pardon?
What is the volume growth which you are factoring in this 15 to 18% kind of top line growth which you are targeting for FY19? Yes. What would be the volume growth?
We are seeing a 10% of quantity growth over last year.
10% volume growth?
Yes.
And if you could just tell me individual volumes in cotton, woolen and home textile for FY18.
I think as far as the woolen is concerned, we are very positive this year that we should grow around 8 to 10% in the volume growth. And in cotton, again, we will have the double-digit growth in volumes in cottons as well for the next financial year.
Okay. No, I got the point. What I was asking is in FY18, how many pieces of cotton garments we have sold, how many pieces of woolen, and then home textile?
I'll share the volumes right now with you.
Yeah.
Just wait for a second.
Yeah.
So if we talk about the woolen category, the volume is a little bit down. It was 12,46,364 pieces last year, and this year it has been 11,47,201 pieces.
Okay.
And if we talk about the cotton's volume, so if I talk about the denims and trousers segment, the volume has been 2,30,000 as compared to 2,35,000. In shirts, we have 3,48,000 as compared to 3 lakh. In t-shirts and other knit and woven, including sweatshirt, tracksuit, jackets, the total volume stands at 26,58,000 pieces, which was 24 lakh pieces a year back.
24 lakh?
Yes. If we talk about the kids segment, it is 4,60,000 pieces as comparison to 4 lakh pieces.
Okay.
And the newly added segment, Rocket, contributed 31,469 pieces. And in textiles, it is 3,25,000 as compared to 3,77,000 last year.
3,75,000 versus
25,000 as compared to 3,77,000 last year.
Sir, if I'm not wrong, this year winter was a bit severe. Then how come we have not been able to match even last year's volume?
See, winter has not been that severe, but the problem is that the period of winter is actually shrinking.
Okay.
It's not that it used to last at 2.5 months, but now it is lasting only for 1.5 months. So that variation in the period is actually, sometimes dissuading the customers to spend the money. But it's not that we have not grown. If we see the jackets, tracksuits and other sweatshirt segments, we have already grown around 15% in volumes as compared to last year.
Okay.
So the period which is October to November, we sell light jackets, sweatshirts, tracksuits actually have grown as compared to last year.
Okay, fine.
Thank you, sir. what Mr. Jain wanted to say was, so far our sales in the winters are concerned, those sales have not gone down. It is because of the fashion, it is switching over from the hosiery to the jacket side.
Okay.
Because jacket is one thing, like, you can immediately recall that jacket is worn normally in the winter season. So, earlier people used to wear more sweaters, less jackets. Now, their taste is changing because of the seasons also.
Okay.
Otherwise, in case we see overall, our winter, this volume has not gone down. If we combine jackets and as well as sweaters, both together.
No, that's perfect. Thank you.
Thank you. The next question from the line of Zaki Nasir. He's an individual investor. Please go ahead.
Good morning, sir. Hello.
Good morning.
Yeah, good morning. I have a couple of questions, sir. Number one is your expansion into other parts of India, because what I remember is a couple of years back you had presence in South. Okay. Then some of the stores were shut down. I would like to know how you plan your foray into the South, because South is a very important market for the T-shirts and trousers and stuff like that. Number two is your debt. Your interest burden stands at 7.5 crores, and you have a reasonable amount of cash balances on the books. So why not make the company debt free? These are the two questions, sir.
First, we'll come to the first question, which was the expansion in southern and western region. Yes, the few of the EBOs have been closed down in south. The major setback we had this year in south was one of our distributors in Tamil Nadu actually got some financial problems. So that is why we could not have orders from Tamil Nadu region, which actually reduced our southern region turnover. But that problem we have taken care. In just 4 months back, we have appointed a new distributor and we have got a very good summer booking also. And the winter booking is going on, which is giving us the confidence that this year will grow in southern region. Now we'll come to the second question about the debt position, why we are not paying it back. This is a tough loan, which is available at subsidized minus 5% of the net loan, which is around 8%.
Okay, so you save a couple of points over there.
Yeah. So, because of the tough loan is there, it is subsidized loan, we are keeping this loan with us. Otherwise, all other debt has been paid by the company.
Okay. And sir, see, the face of the company or the impression of the company, it is primarily a winter wear company, right? But the effort of the management to diversify into affiliated brands and sportswear and T-shirts, do you think that this would be a 3-year plan whereby your quarter-to-quarter variances go away?
See, I think if you are tracking the company from last few years, we have been increasing our ranges in cotton. The revenues in cotton has been going up. The contribution from the cotton segment has reached almost 60%, which was 100% at one point of time. That shows the commitment of the company towards increasing its cotton ranges and the presence in the regions where the cotton is more saleable. So I think the company's endeavor is going forward also to increase its cotton range so that we are dependent, which we were dependent on winter wear from last few years, it's coming down every year.
Fantastic. And sir, one last question which might not be too material, but all the brands are within the listed entity, right sir? Monte Carlo, Rocket and the other brands?
Yes.
Okay sir. Thank you sir.
Thank you.
Thank you, and best of luck for the year, sir.
Thank you. The next question is from the line of Kshitij Kaji. He's from Edelweiss. Please go ahead.
Yeah, good morning, sir, and thank you for taking my question. So my first question is based on the Q4 results. So we've seen a sharp drop in our gross margins for this quarter. So can you elaborate as to why that has happened?
The Q4 is again, I mentioned earlier also, that is traditionally a weak quarter for us. So definitely there has been more discounting which happened in this period. So that actually dropped the EBITDA margin as well as the gross margins. But I think this business has to be seen as an annual basis, because I do not see that by seeing the quarter-to-quarter results, it gives any inference about the company. So I think this company has to be viewed on the annual basis. And annual basis, we have grown almost 11.7% in revenues, and the profitability has grown more than 35%. So quarter-to-quarter, there can be variation because of some dispatches reasons, and sometimes the discounting is more and sometimes discounting is less. But I think it will be more prudent as far as our company is concerned to view it as annual basis something.
Okay, sir. So then if you see your full year margins now going forward, because historically we are doing margins of around 18%, 19%, 20%, and this year we done around 15.4%. So going forward the next 2-3 years, what do you see the margin standing at?
The margin, as far as with other income, the margin is around 18%, and without other income, the margin is for 15.7%. And as we see, the discounting is actually increasing every year, so there can be a little bit pressure on the margins going forward, but we do not see a major effect as far as our margins are concerned.
But do you see them improving over the next 2 years?
I think it should remain stable.
Okay, sir. Okay, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Sanjay Kaul from FE Securities. Please go ahead.
Good morning, Mr. Jain. I wanted to find out, we are a 60% cotton-based company. So how come 80% of the profits come only in one quarter over here, last quarter, which is not predominantly a cotton-based thing? What is the reason?
Yeah, the third quarter actually contributes almost 55% of our turnover, and basically that is the quarter where high-value garments are actually sold. So that is why the profit is more in third quarter as compared to first and second quarter. But if we see from last 3-4 years, the dependence on third quarter is also coming down. Last year it was 55%, it used to be 60% and then 65%. So dependence is coming down on the third quarter, and this year again I think the dependence will come down. So that will, even in going forward, if we see like another 3-4 years, the dependence on the profits also on the third quarter will also go down.
And a suggestion that if you can't keep a 15 to 18% growth, don't give a guidance. We don't want to hear explanations at the end of the year as to why it's not. You think that you can't do 15%, give a guidance of 10% and achieve level. That's better. Instead of giving guidance of 15, 18 and coming out with, you yourselves are saying that margins are going down, discounts are going up. So you think you can't do a 15%, stick to a 10 to 12% guidance. No problem at all. Don't bring it down then afterwards. That's my suggestion.
First of all, I apologize for the guidance of 15 to 18%, but we were actually hoping that we should have this guidance achieved, but somehow it could not be achieved. But going forward, I cannot say 10% when we are again hoping for 15 to 18%. And it's not that we failed our guidance every year. From last 4 years, we are giving the guidance. It is the last year that we skipped it by 3%, but we are very hopeful that this year we should meet our guidance.
Okay, thank you. Thank you.
Thank you. The next question is from the line of Devan Shankar from Trustline Portfolio Management. Please go ahead.
Yeah, thanks a lot for the opportunity. Sir, one thing I wanted to understand is, as you said that the preference of people shifting towards cotton jackets more than sweaters during woolen period. So, do we have any margin difference between this cotton winter wear versus woolen winter wear?
Fortunately, we have little better margins in cotton winter wear as compared to woolen wear, so that is advantageous for the company. And the shift is basically, as the country is a youth country, so people are shifting to jackets, sweatshirts, heavier sweatshirts. So it's a fashion which is changing. So I think as far as total winter wear category is concerned, it constitutes of woolen sweaters, sweatshirts, jackets. So the categories are interchanging, but overall the category is growing.
Okay. And one more thing I want to understand is the competitive positioning. For us, we are quite strong in woolen wear, mainly particularly woolen sweaters and also. But if people are shifting more towards cotton jackets, how is our competitive position and how are the competition in this segment?
I think there is one area which is not having much competition, which is casual jackets, sweatshirts. As far as if we compare with other brands, there is a competition in the formal suits segment, which we are not present right now. So I do not see any further competition increasing in this particular category where we are operating and where we are increasing our revenues every year.
Okay, sir, and receivables have seen increase quite sharply this year. So any particular reason?
Because sales have also gone up, so accordingly receivables have also gone up, and there is some delay.
Much higher than the sales growth.
Yeah, I know. So there are some delayed payment also where we charge interest from our agents.
Okay. It will be back to normal from Q1.
It will be back to normal in this financial year.
Okay. Sure, sir. I'll come back. Thank you.
Thank you. The next question from the line of Priyank Boricha from B&K Securities. Please go ahead.
Hello, sir. Thanks for taking my question. So, my question is, in the year FY18, we had increased our NCS from 141 to 283. So, how do you estimate the revenue to come from this segment and the online segment in the next coming year?
You're talking about the increase in NCS stores?
Yes.
Yeah, see, NCS and online, they contribute almost around 10% of our revenues. And going forward, I think the revenue mix should be around 10 to 11% only. Because this is one area where we are not putting much emphasis, as this is SOR basis, sale or return. So we're putting much emphasis on the outright basis, which is MBOs and EBOs.
So even though we have almost 42% increase in the number of stores of NCS, you see 10% only contributing to revenues.
Yeah, because these stores have been added in the area where we can sell the summer wear. So that's the reason that the summer stores have been added for this year.
Okay, so they are specifically for summer wear, majorly for summer wear.
Yeah, for increasing our summer sales, we have added these outlets.
Okay. And so the next question, regarding you said in the south and western region, you had some issues with the distributor. So now you have changed the distributor. Are there any other strategies to penetrate those markets? And what can we see from that region in our revenue, sir, as a mix?
I think one change which we have made this year was that earlier we used to have the booking which is happening through distributors, and they just go and visit different retailers and sometimes their venue booking. But this year we are planning to have one big venue booking in southern region where a company is holding and tying up with the resort to have invite everyone from the southern region to have the booking over there, which should increase the company's revenue as far as southern region is concerned in the summer wear this year.
Okay, sir. And just to get back to the follow-up question on one of the colleagues which we had about the margins. So we were doing around 20% margins before FY17, and for FY17 we are down to 13 and 15%. So what are the challenges to come back to that margin, and when do you see we will be reaching a level of 20%?
See, I think it again depends on the economic growth of the country also, because if we see and if we compare with other brands also, everybody is experiencing increase in discount sales. So when discount sales are more every year, definitely it put pressures on the margin. Not for us, it's for everyone. And if we see if the discount sales are less this year, then the margins can improve. But again, it is very early to say about that, but we hope that we should maintain these margins going forward.
This one in the sense is 15% range, the FY18 margins, correct?
Yeah.
So, but even the input prices are going up, if you see cotton and wool. So then how will you maintain the profitability of 15 to 16%, sir? How do you plan to maintain that, since the input prices are going up?
Input prices, we are already hiking our product prices also. So input is not an issue. Issue is the discounting sales. But when the volume is increasing, when the value is increasing, the overhead comes down. So it helps us to maintain our margins.
So we have taken a hike this year?
Yes, we have taken a hike this year also as well. hike was around 5 to 6% in the prices. And price hike is around 5 to 6%.
The total margin is around 15.5%.
Yeah.
So what will be the distribution of that?
Yeah.
The division will be that. 10% from volume.
The 10% should come from the volume growth and 5 to 6% should come from the price.
Okay, sir. I'll get back if I have any other questions. Thank you.
Thank you. The next question is from the line of Ashwini Agarwal from Ashmore, India. Please go ahead.
Also, आपके processing के 4999 plus.
We seem to have lost the line, so we'll move to our next question, which is from the line of Kunal Patel from Equilegence Capital Advisors. Please go ahead.
Hi, sir. Thank you for the opportunity. My question is, during the third quarter con call, Mr. Jain said that Q4 is likely to be better than Q4 of last year, and it was mid of Feb then. So what went wrong after the con call, and was second half of last quarter was particularly very bad as compared to first half?
Yeah, I think you are right. When we were on the con call for the third quarter, we were very optimistic that this year the discount level should be less as compared to last year, because we were seeing that the consumption is increasing and the economy is improving. But actually it didn't prove that much on the ground. Actually the discounts increased in the fourth quarter, which actually impacted the margins. So that was the issue. Actually we were not anticipating, but actually it happened in the fourth quarter.
Mm-hmm. Okay, so particularly in second half of last quarter it went bad.
No. Fourth quarter, the discount sales have increased as compared to last year. That impacted the margins, basically.
Okay. So my second question is, so how much of capital is employed in your home furnishing and kids segment, if you can tell me?
In home furnishing, it is a zero capex business because it's all trading business.
Okay.
We import from different countries and then we sell it in India. These are our exclusive designs.
Mm-hmm.
So only working capital is involved.
Okay. And what about kids segment?
Kids segment also, it's all complete outsourcing. So only working capital is involved in the kids segment as well.
Okay. Any reason why we were not able to increase our sales in kids segment last year?
Pardon?
Any reason why we were not able to increase our sales in kids segment particularly?
The kids segment, the sales have increased. I'll just give you the figure for the...
Yeah, if you can give me, yeah.
Yeah. The sale was 19.96 CR last year. This year it is 21.78 CR.
Okay. Sir, my third question is, again, I'm coming back to the question which earlier participant asked regarding debtor days. So it has gone up from 92 days to 110 days. During last con call, we were very sure that we'll recover most of our debtors in Q4. So why there is a delay in the payment? Is it because of there is some issue with the system, or if you can just elaborate on that?
I think because the industry is a bit slowed down, the retail sales are not happening that much. So that is why the debtors have increased. But now we are pushing all our agents and distributors to fasten the payment. And I'll see that in next 6 months we should see the improvement by the steps we have taken in last 3-4 months. So we should definitely see the improvement in next 6 months as far as debtor position is concerned.
Okay. Sir, my final question is regarding your advertisement cost. In Q4, your advertisement cost has gone up significantly as compared to last year. So any particular reason why it has gone up in this particular quarter? Because your strongest quarter is December. So I would assume that you will spend most of your advertisement expense in second quarter of every financial year.
No, basically the summer advertisement which happens, the dispatches have been earlier this year, so that is why the advertisement also happened earlier as compared to last year, because the dispatches start in the February itself this year. So that is why the advertisement have been preponed as compared to last year.
Okay, and any full year guidance for advertisement expenses?
See, we maintain the same guidance of 3 to 4% of our revenues.
3 to 4%. Okay. Sir, if I can slip in one more question. Your other expenses have come down from 20 to 21 crores. So any particular reason why it has gone up? If you can just elaborate on that.
I think because of industry is, a bit slowed down, the retail sales are not happening that much. So that is why the advertisement have been preponed as compared to last year.
in this particular quarter. So I don't see it's very significant, but if you can just tell me more about it.
Yeah, it was other expense actually has come down because of advertisement expense, which is around 5 crore has come down because of advertisement. And so this is the total 6 crore is total advertisement. Total 6 crore is the difference between the last year other expense and this year other expense. Out of that, 5 crore is the advertisement cost only.
Okay, I'll talk it. I'll ask it offline from you. Thank you so much.
Thank you.
Thank you. The next question is from the line of Raghavan Rajkumar from Share Giant. Please go ahead.
Sir, you have mentioned during the last quarter that a newly launched sportswear brand Rocket did quite a good sales during the quarter. However, during this quarter, there is no mention of the same. If you can please guide us, how do you see the future regarding that?
See, we are very positive as far as future is concerned. It was the online channel launch which we did last year just to test it that how people react to the sports apparel brand from Monte Carlo, and the response was good. So now we are putting up in the offline channel as well because the response has been generated from some retailers, some other shop stores also. And also Pantaloons has this year tied up with Rocket, putting up 20 outlets at the Pantaloons. So I think this year actually the response of Rocket will come as compared to last year because last year was just a test launch for online sales only.
Okay, sir. Sir, another question is on advertisement. Your advertisement cost seems to be down over the last year. So what could be the reason and what is the company strategy going forward regarding this?
Sorry, can you please repeat the question?
Sir, your advertisement cost has gone down in this full year compared to the previous year. So what is the reason for this and what is the company's strategy going forward regarding the advertisement cost?
I think we have saved on the production cost to produce the ads and to produce the films. We have made saving as compared to that also because we used the last year's production film in this year. That saved the cost for this year's advertisement expense.
Absolute terms, the turnover has also gone up.
So, and secondly, we also now believe in zero-based advertising. So, whatever is required, whatever guidance we get from our distributor agent, accordingly we go for advertising rather than advertising which is central budget advertising.
Great, sir. So, sir, if you can also guide us of the future strategy, how you are going to revive the growth in the long term and 3 to 4 year perspective.
Pardon?
So, for the long-term strategy of the growth perspective, like there are hiccups in the business, but in the long term, 3 to 5 years, how do you perceive to be the growth to recover?
Yeah, I think now some of the issues which have been there with us, like the demonetization, GST, before that we have been growing 22% CAGR from last 10 years. So these 2 years actually we have came down to 15% and 12% this year. So I think now as we see that some of these things have now over and with GST coming into picture, which should increase business in organized segment as compared to unorganized. So we see that the growth of 15-18% should not be a challenge for us going forward 3 to 5 years.
Thank you, sir.
Thank you. The next question is from the line of Ashwin Agarwal from Ashmore, India. Please go ahead.
Hello, sir. I just want to ask a question. If you take into account the cotton clothing, which is also worn in winter season, like jackets and sweatshirts, etc., then what is the percentage of your revenues which is still a winter season revenue?
See, if we see our third quarter revenues, it's almost 40% comes from the cotton categories of jackets, sweatshirts, tracksuit, balance comes from the sweater. So that is the revenue mix of the third quarter. The winter wear categories.
Okay, so the entire December to December quarter sales, I should take it as winter wear sales, is it?
Yeah, so October to December is basically a winter wear sales, but also we sell t-shirts, denims, shirts, trousers, stole and shorts, those categories also in this quarter.
Yeah, I get it. So, but my whole question is that if you see your revenues as whatever 560 crores as your non-textile revenue, out of that, what percentage is winter wear? I mean, is it 40-45%? What does that number work out to in your calculation? Because
you don't have a figure. I don't have a complete figure with me, but I can mail it to you.
Okay.
Yeah.
Okay. And the other concern, some of the other participants have also asked, I mean, you are in a situation where you're expanding your footprint into South India, into West India, Central India. You are introducing new products like Rocket. In that environment, how do you think about actually decline in advertising sales? I mean, isn't this the engine to drive your sales? So, why is advertising expense coming down? That kind of appears a little counterintuitive to me.
Look, there is no reduction as far as distribution cost is concerned. It's only because this year we have not produced the film, which we used last year's film. So we saved on those accounts for summer and winter. So last year's campaign of a TV campaign, which is film was used. So next year again, when we produce a new film, again the cost will go up.
So next year we should expect the advertising expenses to go up as a cost of producing a new film.
Yes, definitely.
Okay. And if discounting, you're saying is become more of an industry trend led by online.
Yeah.
And that is something that we just have to live with. There's nothing that can be done.
Yeah. Yeah, because it has become a trend overall. Everybody actually, goes for discount sales just when season is 1 or 2 months over. Like in this year, as we entered into May, the season started in February 15th, and most of the brands have gone for mid-season discount sales. Even we have not started, but all the brands, if you go to any of the brands, their mid-season sale is already started in the May first week. That shows that the discounting sales is actually picking up, and the customers are also preferring the discounting period in getting the goods.
Okay. And last question, are you looking at any new product introductions like suits you mentioned you're not present there? I mean, ethnic wear is somewhere you're not present at this point. I mean, are you looking to extend into those directions as well?
Yeah, I think this year we added one more segment, which is economy sweaters in Cloak and Decker. So earlier we were only producing the premium sweaters in Monte Carlo, but this year we have added Cloak and Decker sweaters, which is the economy segment sweater. I think that should do well going forward.
Okay. All right. Okay. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Ankit Kedia from Centrum Broking. Please go ahead.
So just wanted to know what percentage of our sales is actually discounted, and could you actually give a quantum of discount, season-wise or annual level, or woolen segment, cotton segment-wise, to get an understanding how it's increased, say, over 3-year period. Say 3 years back, what was the discount level, and today, what is the discount level?
Basically, now we have to divide it into 3 areas. Basically, when we go for MBO sales, we do not bear any discounts. It's only in the EBO, LFS, and online. We bear the discount part. So that sale is almost 65% of that sale. 35% comes from the MBOs. So in the 65% of the sales, the average discount of that total sales comes around 20 to 23%.
So 23% is the discounting?
Discounting sales of the total sales, which happens on the percentage of sales.
So on 55%, 23% is discounted sales?
Yes.
Sure. And so how much would that discount have increased, say, over last 3 years? Would you throw some number to that?
That I think we can check it up and let you know. If you can just give us your email address and all, we can pass this information to you.
Sure. And sir, is that the reason why, despite our store network, our EBO counts not increasing substantially, our share of revenues from, EBOs have increased over last 3-4 years?
No, last year, actually, we have not increased our EBOs. The reason being was that because we were adding national chain stores also. But this year, we are adding around 20 to 25 EBOs in this financial year. So you would see a EBO touching to 260 from present 240.
Right. So, but our contributions, revenue contribution from EBOs, if I look at, say, from FY18, which used to be around 36%, has become 42%, while our count has not grown substantially in the same percentage. So is discounting the factor, predominantly via EBO where we don't discount the share?
Discount happens in EBOs as well as in MBOs also, but in MBOs we don't bear any discounts. We do not have any discount sharing with them. But the sale of EBO as a percentage of total sales have grown as compared to last 2 years to around 42%, as you rightly said.
So why is that happening? So in the sense the same store sales in the EBOs is increased significantly, or what are we doing to attract that footfall while our store count has not grown?
So there has been a 14% same store growth which happened in EBO last year.
Okay.
Yeah.
Sure. And sir, just wanted to know on competition, while you said discounting happens, so who would be our predominantly competitors? Because our segment is such where we don't have any national competitor present. It would be more unorganized players or more, few regional players who would be our competition. So with them being given our brand, shouldn't we have some pricing power where, we would not discount our product significantly?
No, you cannot have the goods sold on MRP when every brand in the mall is selling on discounts. The only power you can have is that you can definitely have your prices higher as compared to other brands because nobody is actually matching your quality and the product as far as woolen sweaters are concerned. But when the discount period is there, a customer comes to your showroom, when everybody is offering the discount, you have to offer the discount to, catch the sales.
Sure. But it is not like because competition is discounting heavy, we are doing it. It's because probably other brands and other categories of cotton products are doing. In our store, we are forced to keep the discount for increasing walk-ins.
To more conversions, basically, if I can say.
Sure. And so who would be our major competitors for woolen segment currently?
We are competing with Benetton, who makes wood sweaters. Then we are competing with Madura brands also. We are competing with Raymond also in the market.
Sure. Thank you so much, sir.
Thank you. The next question is from the line of Pratik Ajay. He's an individual investor. Please go ahead.
35%, 40% you ले लो ना.
Hello.
You may go ahead, Mr. Mr.
So the question is regarding your expansion into the south, sir. What route would you prefer? Would you prefer the route of a shop and shop, or would you want to have standalone stores? That is question number one. And see, as you mentioned, our competition is with Raymond's, part of Madura band, and as you are aware, their network of stores is in compared to Monte Carlo pretty large. So how would you look at that aspect of it?
If I correctly understood your question, you mean to say the balance between the shop and shop and EBOs?
Yes.
See, this year we are opening around 25 shop and shop with the leading MBOs to increase our sales. At the same time, we are adding 20 to 25 EBOs also.
Okay.
So that is how we are going forward in this financial year.
Okay, sir. Thank you. And about how do you plan to face competition? Like the people like Raymond's, people like maybe Indian Terrain, they also come out with different categories. So suppose they come out with winter wear. I mean, and they for some reason their reach is far beyond. So, I mean, do you think that you would want to increase your ad spend in that segment? To retain our edge as a premium winter wear company?
These people are already in winter wear. The Raymond, Indian, they are making sweaters, they are making winter wear. But they have been not able to gather that market share because of some of the limitations, because sweater is not easily to produce. It goes to 35 processes and it's actually a very complex way to produce these sweaters. That is why we have an edge over the years. But going forward, definitely, they are also competing with us and they are increasing their presence in northern India also, if I talk about Indian Terrain and Raymond. So they are providing competition to us. But we have been able to tackle the competition from last so many years, and we are confident that we will be able to do that in the future as well.
Okay, sir. Thanks a lot, sir.
Thank you. Anyone who wishes to ask a question, you may press star and 1. The next question is from the line of Kunal Patel from Equilegence Capital Advisors. Please go ahead.
Sir, thanks for the opportunity again. My question is regarding your strategy for increasing our profitability in rest of the quarters. 45% of your revenue in Q1, Q2, and Q4 contributes only 20% of the profits. So what is our strategy to increase our profitability or margins in those 3 quarters?
I think again, this is the same question which was asked before also. From last, if we compare 5-6 years, the profit distribution is actually increasing in favor of other quarters also as compared to, it used to be, third quarter only which used to generate all the profits, but now it is coming down. So going forward also I'll say the same thing, that the dependence on third quarter on the revenue and profit is reducing every year. And this year also it will further reduce.
Okay. But if I look at your competitors, so your competitors are actually making decent profit in these 3 quarters where most of the sales are cotton sales, cotton-related product sales. So why we are not able to show the same numbers or similar numbers? Not same, but
I think if you compare the competitors on the annual basis, if we are making the EBITDA of 15.7% operational EBITDA, the competitors which we are, like information available with us, the Madura makes around 9% EBITDA, the Raymond makes around 7% EBITDA, and it's only the KKCL which have equivalent EBITDA or more EBITDA than us. Otherwise, all the competitors which we are mentioning actually having the lower EBITDA. So, if we compare the annual basis, but if we compare the second quarter and the fourth quarter definitely we are hurt more because we have a revenue which comes from the third quarter. Actually, some of the goods go into discount in the fourth quarter. That actually impacts the EBITDA in the fourth quarter. Otherwise, second quarter also, if we see the profitability, it's almost, I think last year we made in the first 6 months, the profitability was around 18 CR of the PAT.
Okay.
Yeah.
Fair enough. Sir, my last question is regarding your use of cash. We have been talking about some acquisition, but you have not been able to find the right candidate. So what is the strategy now? Do you plan to reward your shareholders with dividends or buybacks or something? Do you have any such plan?
I think nothing has been discussed in the board as far as buyback or anything is concerned, but that space is again, I would say that the right opportunity is not available. That is why the cash is not being utilized. Unless and until we have something which gives value to our shareholders and we get the brand or product at right price, we definitely go for that.
So till when will you sit on cash and wait for the right opportunities? It's been more than 6 quarters now. So I'm just wondering when do you plan to use this cash?
Unfortunately, I don't have a clear answer of when we can be able to utilize this cash. But again, I'll say that unless and until we find a suitable opportunity, then only we can go for the acquisitions.
Okay, fair enough, sir. Thank you.
Thank you. Anyone who would like to ask a question, you may press star and 1. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Hello, sir. Thank you for taking my question. Sir, if you look at the EBITDA margin that we have got this year, and if you look at what they were 5 years back, then they're significantly lower. And even this year, while YOY EBITDA margins have expanded, we have seen some expansion in debtor days. So over the next 3 to 5 years, do we see the fact that we are now going to stay in such EBITDA margins with such credit period, or are we going to go back to where we were 5 years back, where we see the debtor days going to 60, 70 days and EBITDA margins going to 18% plus?
I think
and more importantly, how do you see this happening, if at all you see that happening?
I think 2 areas where we should see improvement this year is one is debtor level. We are very confident that the debtor level, the number of days will come down this year. It will be seen in next 2 to 3 quarters. And secondly, as far as EBITDA margin is concerned, I have said earlier also that we should see that we should have a stable EBITDA margin as compared to last year. As whatever we made last year, we should see same going forward also.
Sure. So the way I understand is that what we have seen now or last year of sorts, which is this band of 15% odd, is what we are more likely to sustain over the next couple of years. Is that the right way to look at it, sir?
Yes, I think we'll be able to sustain the last year's margins.
And so likewise on the receivable days, we had a spike this year while you're guiding that we will go down. If you go back in time over. So do you see that reverting back to that, the debtor days going back to something like 70, 80 days, or again we'll just go back to last year's levels, or?
The debtor levels have, same, I have explained earlier also, the debtor levels have gone up because of sales, and also there were some delayed payments also. So those things have been taken care of now. So going forward, we'll see that the number of debtor days will come down.
Okay. And so one last thing on the competitive intensity, how do you see that, what is going to tilt in our favor or against us over the next 2 to 3 years?
I think because we have our own USP, or we have established brand, particularly in the northern and eastern market. So already we have got a very good retail space which is available with us, which is not going to go away from us. And also the brand equity is very strong. And we also introduced cloak and decker economy segment, which will take some share from the unorganized market. So these things will go in our favor as far as our growth is concerned.
Sure. Thank you very much, sir.
Thank you. A reminder to all the participants, if you wish to ask a question, please press star and 1. Anyone who wish to ask a question, you may press star and 1. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
This conference is now that was the annual conference, conference call for the annual results. Since there is no question, so we wish that now investors have nothing in their mind to inquire again from the management. And if you have any question in your mind, you can always shoot out an email to us and we will immediately come back to you. And thanks to everyone who spare your time and interact with the management for the real working of the company. Thank you very much. Have a nice day.